The Federal Reserve's strategy, initially recalibrated in 2020 to prioritize labor market inclusivity over strict inflation control, is undergoing a significant reassessment. This shift, anticipated to be announced by Chair Jerome Powell at the 2025 Jackson Hole Economic Symposium, reflects lessons learned from the pandemic-induced economic upheaval and the subsequent inflationary pressures. In 2020, amidst the COVID-19 pandemic, the Fed adopted a flexible average inflation targeting framework, allowing inflation to exceed the 2% target temporarily to support a broad-based and inclusive labor market. This approach aimed to address historical disparities in employment among various demographic groups. However, the unexpected surge in inflation during and after the pandemic has led to a reevaluation of this strategy. The upcoming Jackson Hole Symposium serves as a pivotal platform for the Fed to unveil a revised strategy that emphasizes inflation stability as a prerequisite for achieving employment goals. This recalibration aims to strike a balance between controlling inflation and maintaining strong employment, harkening back to pre-pandemic thinking where price stability is seen as foundational for labor market strength. Critics have argued that the 2020 approach delayed the Fed's response to rising inflation. While some elements of the previous strategy may remain applicable during economic weakness, the Fed is likely to adopt more traditional inflation targeting practices for normal conditions. This strategic shift comes amid a complex economic backdrop characterized by elevated interest rates, persistent inflation pressures, and political scrutiny. The current federal funds rate is set between 4.25% and 4.50%, significantly higher than for most of the post-2008 period. Markets are closely watching for signals on whether the Fed might cut interest rates in September, as the U.S. economy faces challenges from persistent inflation, tariffs, and slowed job growth. Powell may also address changes to the Fed's monetary policy framework, with observers expecting updates to better align with price stability goals. As Powell prepares for his final Jackson Hole address before his term ends in May 2026, the speech is anticipated to provide significant clarity about the Fed's future policy direction. Investors and policymakers alike are keenly awaiting his remarks, which are expected to outline how the Fed plans to navigate the dual mandates of controlling inflation and fostering maximum employment in an evolving economic landscape. In summary, the Federal Reserve's upcoming strategy overhaul at Jackson Hole marks a critical juncture in its monetary policy approach. By recalibrating its focus toward inflation stability, the Fed aims to restore a balanced framework that supports sustainable economic growth and employment, learning from past experiences to better navigate future economic challenges.